A very good morning to all my BCA final year students. Let us commence with your subject of COS, that is Computer Oriented Accounting System. Now, in the previous few classes, we were studying about the accounting equation. We did a number of 5 problems, and I also gave you 2 problems to do it of your own. Very few students responded to it, but they tried it very well, and very few students were correct also. The second problem caused a bit confusion between you guys. So I have solved and sent you the answer on your respective groups. Now, we are ending the part of accounting equation over here. I'll be sending you the questions to perform because it needs practice. Everything, if you want to be perfect in accounting, it needs practice. It need to be practiced, or it needs regular practice so that you can perform in your examination also. So coming forward to your unit 1, after the accounting equation, we have the journalizing of transactions. Journalizing of transactions. So before going into journalizing of transaction, how to do a journal entry, let us learn what is a journal, what are the rules to be followed by performing a journal, and what are the different methods of journalizing the transactions. So moving forward in the video, let us learn firstly what is journal. The word journal has been derived from the Latin word "john", which "jor", which means day. Therefore, journal means a daily record. Okay. So it has been derived from a Latin word that is "jor", which means a daily record. We record the daily transactions of a business. Daily transaction example from small to small, from a small to medium to a large transaction. Example, if we order tea for ourselves in a business, we record that. If we order furniture for a business, we record that. If we bring machinery to the business, we record that. Means every little to little and big to big transactions are recorded in a day book or on a daily basis, which is called as journal. It is called a book of original entry because every transaction is first recorded in this book. So journal other name is book of original entry, and it records every transaction. First it is entered into journal, then to the respective books. Like purchase of furniture is recorded first in the journal, then it is transferred to the purchase account. Sales of goods are first recorded in the journal, then it is transferred to the sales account. Now moving forward to the definition. According to Eric Kotler, the journal is a book of original entry in which transactions are recorded and provided for specialized journals. Means transactions are first recorded, then it is divided into particular or specialized journals. First recording of transactions is done. Means whenever a single transaction happens in the business, it is recorded in the journal book. So it is called as firstly a day record book or a daily record book, and secondly book of original entry. And preparing a journal is also very important because human brain is not capable of remembering everything. So we record everything for our future references and also for our memory. So journalizing process. What is a journalizing process? Journalizing process is nothing but when a transaction takes place, we just journalize the part, journalize the transaction. Example, if there is sales made, then there are two-fold effect in the sales made, sales of goods. One, cash is coming inside the business, and second one, the goods are going outside the business. So making cash coming inside the business and making goods, showing goods going outside the business is the journalizing process. Simple and easy to understand. So in the journalizing process, we have two different types of approaches. First one is the traditional approach, second one is the modern approach. In this video, we'll learn about the traditional approach, how from the ancestors' time or the previous time, accounts were handled by the accountants, or we can say the accountants. So accounts basically are categorized into 3 parts. Accounts basically are categorized into 3 parts. First one is personal account, second one is real account, and third one is nominal account. According to the traditional approach, accounts are divided into 3 parts. First one is personal, second one is real account, third one is nominal account. So let us study the personal account individually, real account individually, and nominal account individually. First one, personal account. Now, what is a personal account? Personal account, these represent the accounts related to individual, firms, society, clubs, hospital. Okay. So what do we mean by individuals? Individuals means human beings, some person. I am a first person, second person, third person. In English, we study first person, second person, third person. So individual persons means Alok, Richard, Ali, Hussein. So these are individual persons. So that individual persons is a personal account. Firms. Firms means Tata Limited. We can say XYZ Limited. We can say Reliance Digital. We can say Reliance Group of groups. And society. Society means there are different societies also belonging in our environment. Society example, we can say society as example of um, example of society means we can give the example of a charitable trust, a society, or we can say uh, gold loans. That gold loans, I don't remember the name, but there are gold loans. That is one society. Society means a group of institution performing together. Society means a group of institution performing together. Clubs doesn't mean disco or any other clubs. Clubs means there are different, like Rotary Club. We have different individual clubs. They have also they are also called as personal accounts. And hospitals, charitable hospitals, government hospitals, private hospitals, etc. These can be further divided into, then again the personal account can be further divided into natural personal account, artificial personal account, and representative personal account. So what is a natural personal account? For accounts related to human beings or any person in particular is called as natural person account. Human beings, related to human beings only. Example, myself, Sabah's account, or you can say any of your names, like we say third year have Trilok, or any other person's name. Subhasmita, Trilok, we can say Nivedita. So you have your personal matlab identity, and you referring to your personal identity is called as your natural personal account. Means belonging to a human being, with after a human being the account is maintained, that is a natural personal account. Second one is artificial personal account. These accounts are related to the artificial person. A firm is not a natural person, it is artificially created to do business. Firm, or we can say firm, business, other name is called as firm, company, we can say business, other name is called as firm. The next one is clubs, schools, colleges, university. So we have also a trust, Disha Trust. That is an artificial personal account. But individually, we can say the faculties of Disha, like me, or your HOD sir, or your ma'am. So there are natural personal account, but artificial personal account is your college, uh, Disha College of Management and Technology, or we can say Disha Trust, Charitable Trust. So that is belonging to artificial personal account. Now, what is representative personal account? These accounts are related to the specific account to represent indirect a group of people, such as salary account to employees. Now, this is a particular account which is specially opened for an indirect group of people. Group of people means if you are a college providing salary to your staff, if you are a manager providing salary to your employees. So this is a representative personal account, means presenting a group of people and which are uh, indirectly indicated, represented indirectly. Moving forward, now real account. So real account does not have any particular definition, but it has two different types of categories, that is tangible real account and intangible real account. So what is tangible in a real account? We have learned our definition of tangible assets, right? So tangible real account is the we can say the account related to those assets. So these accounts are related to those assets which can be seen, touched, felt, measured, purchased, and sold, etc. Example, plant account, furniture account. So all the assets which can be seen, touched, felt, measured, purchased, and sold are called as tangible assets, and account related to those tangible assets are called as tangible real account. There is a spelling mistake on the screen. Okay. Now coming to your second part, that is intangible real account. What is intangible real account? These accounts related to those assets which is difficult to touch in physical sense but can be measured. Obviously, it cannot be seen, cannot be touched, but can be measured in terms of money or monetary value. Example, goodwill. Goodwill cannot be seen, cannot be touched, but it has a value. Whenever you take money from the public, if you have a goodwill of your company, you can easily grab investment for your company. Now, second one is copyrights. Copyrights and patents. We see there are different copyrights of different songs. Old songs are now made into remix. Example. So those remix can be played, those copyrights of those songs are purchased by a company and then the remix it made. So that is called as intangible real account. Moving forward, that is nominal account. So what is a nominal account? These accounts are related to the business expenditure, losses, incomes, and gains. Expenditure, losses. Expenditure is a different, expenses are different, and losses are different. Expenses are made for the future incomes, but losses are not expenses. All all expenses are not losses, but all losses are not expenses. So there is a difference between expenses. Expenses are made for the future incomes or future gains, but losses are not made for the future income or future gain. It can be abnormal loss or normal loss. Incomes means we gain something from the business. Okay. And gains means we're getting profit. Example, salary account, purchase account. Nominal account is like we have expenses, like example, we can say salary account, and incomes, purchase account. Okay. So there are, here comes our main part of your accounting. That is the rules of debit and credit under traditional approach, or golden rules of accounting. There are three golden rules of accounting according to the accounts we studied earlier. That is personal account, real account, and nominal account. First thing is personal account. Debit the receiver and credit the giver. Whenever it is a personal account, example, individual person, Sabha's account, means anything received by me is to be debited, anything given by me is to be credited. Suppose I purchased, example if I give, if Sabha purchased mobile phone worth rupees 50,000. So I am giving a cash of rupees 50,000. I am receiving mobile phone. So the giver, debit account means Sabha the giver. I am giving the money. So Sabha's account debited to, Sabha's account the receiver means the mobile company's account debited to the giver's account, to Sabha's account. So mobile account debited to Sabha's account is the example of your personal account. Any person, personal account can be real person. I gave an example of myself, artificial person, school, colleges, etc. And we can say thirdly, representative personal account. That can be a group of person like salary account. Okay. The second part is real account. Debit what comes in, credit what goes out. Debit what comes in and credit what goes out. Again, I gave the example of tangible assets. Suppose purchase of furniture. Purchase of furniture means, purchase means cash is going out and furniture is coming in. So furniture account debited to cash account. Furniture account debited to cash account. To cash account means it is a credited. Before, in the first we'll write the debit part and secondly we'll write the credit part. Let us not go deep into that. I'll teach you how to write the journal entry. I'm just giving you an example. The third one is nominal account. Debit all expenses and losses and credit all incomes and gains. So these are the all expenses are to be debited and all incomes are to be credited. Incomes and gains are to be credited, and expenses and losses are to be debited. So these are the basic three rules of traditional approach in your accounting and the golden rules of accounting. You have to remember while performing a journal entry, these three things are basically important. If you forgot these three things, you cannot perform accounting and you cannot do a journal entry. So always remember the three golden rules of accounting: debit the receiver, credit the giver, debit what comes in, credit what goes out, and thirdly, debit all expenses and losses, credit all incomes and gains. So this is all about the traditional approach. So if you have any doubt, you can WhatsApp me or call me on my number. That's all for today's class. We'll continue with the next class in your coming videos. Thank you, one and all.